So I spend a lot of time in different option groups on Facebook and on Discord, and a question that I get asked all the time by members of these groups is, Sean, what strategy do you use to trade options? Or, hey Sean, what do you think of me selling covered calls or selling volatility? And this is a really interesting question that I get asked because what I think is always, why are you tying yourself to one strategy? Right? What is it about this one strategy that you think will work? And it's a lesson that I learned really early on in my trading career, which is that edges come and go. So one strategy that works today may not actually work tomorrow, and then it may start working again in the future. So what I say to these traders is, rather than being focused on one strategy and mastering that strategy, we should be spending our time becoming versatile traders. I think versatility as a trader is something that is underappreciated in this market. And the reason that I think it's underappreciated is that it's actually the hardest thing to do as well. So not many people get to the point where they actually can call themselves a versatile trader. Right? What would it mean to be a versatile trader? Well, it would basically mean that regardless of the opportunity in front of you or the market that you're in, you can find a way to make money. So when I go into the market looking for a trade, I follow a three-step process. The first thing that I do every time that I look for a trade is I look for a market inefficiency. So I always start by trying to find where is there a mispricing in the market. And in the option space, it usually has to do with the premium itself. So where can I sell an option for $5 when it's really worth $3? Or where can I buy an option for $3 when it's really worth $5? Once I have found a pricing inefficiency, I've found something that's worth my time to look into, because now if I can understand that inefficiency, I can actually go out there and buy a $5 bill for $3 or sell a $5 bill for $7. So that takes me to the second step of my process, which is that I always try to understand why the inefficiency is there. Right? It's not just enough to find a mispricing in the market, because sometimes there's a reason why it's mispriced. For example, maybe there's insider trading going on, or maybe the volatility in the market has gone up so much and there's a good reason why. Maybe it is extremely uncertain times and there's a reason why volatility is so expensive. So it's always important not just to find a market inefficiency, but to understand why it's there, right? Something that you'll see time and time again in trading is that while the trade itself might be a little bit complex, the actual idea and fundamental reasoning for why we're taking the trade is extremely logical. Something is underpriced. Something is overpriced. There's too much demand for this. There's no supply for that. There's always a logical reason why we're taking a trade. And when we try to apply logic to the inefficiencies, we're able to filter out the bad apples that could be insider trading or something that we don't want to get involved in. So step one is about finding the inefficiency. Step two is about understanding the inefficiency. And then step three is about structuring a trade to capture that inefficiency. So the amazing thing about options is not just that you can buy a put or a call, but that you can use combinations of puts and calls to structure trades that let you take almost any view on the market that you want. You can use things like skew and term structure and all of these other factors to help you structure trades within the options market to let you capture even the smallest inefficiency. So that's the three-step process that I follow every single time I place a trade. Find the inefficiency, understand the inefficiency, structure a trade to capture that inefficiency. So obviously there's a lot of math and a lot more work that goes into it, but the process itself is a simple 1, 2, 3 process. It's easy enough to follow once you learn these skills. Trading becomes an easy game when you know what to look for. The hard part is knowing what to look for. So once you figure that out, you're able to sort of become this versatile trader that I've talked about, where regardless of the market condition, regardless of what opportunity there is or how volatile the market's being, or if we're in a bear or a bull market, you'll always be able to find inefficiency and you'll always find ways to make money. And that's the sign of a really good trader.